What's up, guys? Good evening. Are we live? Let me double check over here. Should be live, huh? It says live streaming, live stream offline. Yeah, we should be live already. Mm, Are we live, guys? Can you guys hear me and see me? Let me double check here. Um, Let me see. There you go. Yes, we're live. What's up, guys? How are you? Good evening. Welcome back to another live stream. How was your trading session today? We had a quiet trading session because of the Thanksgiving week. We are very likely to see a non-volatile week, and this is going to be a short week, so the markets are going to be closed on Thursday, and then on Friday we are going to have half of a trading session from 9:30 a.m. until 1 p.m. So this is going to be most likely, yeah, quiet indeed. What's up, Nain? Kiasi, Lina Marie, welcome back. I feel like it was so choppy. I wasn't able to make a decent trade. I didn't open any trades today, guys. Not a single one. I just closed the trades that I opened last week. There was, for the most part, nothing to do out there, guys. Take a look at the S&P 500. So we traded between or inside a 30-point range, very narrow range, extremely tough to day trade. So I simply closed some trades and I actually didn't open any trades. I sold some covered calls of Coinbase and Tesla, but other than that, I didn't do anything. And for the most part, this is going to be a quiet week. We don't need to force anything. Volatility, actually, the VIX went down today 3.29%, which is normal given the fact that the Thanksgiving week is usually a quiet week, as I just told you. In which the S&P 500, by the way, guys, gains on average 0.65% during Thanksgiving week. So this might be a quiet week. We might have some opportunities in order to take some trades, depending on the members of the Fed that we are going to see, that we're going to listen to speaking throughout this week. Actually, tomorrow at 2:45 p.m. Eastern Standard Time, we have the Slayer of Bulls, Mr. James Bullard, the president of the Federal Reserve of St. Louis. That might bring some volatility to the markets. Today we had Mary Daly, which is the president of the Federal Reserve of San Francisco. She didn't sound hawkish. Let's just put it that way. Didn't say much. And then later on today, we had Loretta Mester, the president of the Federal Reserve of Cleveland. And none of them said anything, let's say, very hawkish or dovish that could have moved the markets. That wasn't the case. So, Sharon, hi, how are you? There you go. Drew, what's up, guys? We had another red day across the board. The bulls seem to be losing steam. The Russell 2000 went down today 0.57%. Nasdaq went down 1.09%. Dow went down 0.13%, and the S&P 500 went down 0.39%. Crude oil went down today because we had the Dixie, the US dollar, going higher, 0.85%. And we got bad news once again from China, guys. Once again. So last week we saw a very decent rally when it comes to Chinese stocks. So the Babas of the world, the Neos of the world, the JD.coms of the world were flying last week. And today we found out that there was a new COVID-19 outbreak in China, and the Chinese government is going to impose a new restrictive measures, if I can speak today. So the Chinese government is going to impose over the economy new restrictive measures that are obviously will have a negative impact over the Chinese economy. And on top of that, we got news this morning about a potential oil production cut when it comes to the OPEC. that there was an article that was posted in the Wall Street Journal, and at around 2 p.m., 2:30 p.m. Eastern Standard Time, the Saudis stated that that was fake news. That there is no oil production cut in sight, and the Saudis even implied that they might be thinking about cutting production. Actually, oh, sorry, no, I am saying this the wrong way, guys. So there was an article of the Wall Street Journal that stated that there might be an increase, a production increase by the OPEC, and then at around 2:30 p.m., 2:40 p.m., the Saudis stated that there will be no increase in oil production, and that rather they might be cutting production. I think that the OPEC has its next meeting on December 5th. So the fact that the Dixie went up today, and with these news coming from China and the fake news that the Wall Street Journal posted, we had crude oil going lower today, going down 0.42%. Gold and silver went down today because of the strength of the Dixie of the US dollar. Gold went down 0.82%, silver went down 0.58%, and the 10-year Treasury yield went up today 0.18%. So, from a mechanical standpoint, if you guys remember the workshop that I did with Mario last week, we had let's say the mechanical factors over the table for the market to go down today, and we had a red day across the board. If we take a look at the sectors of the market, the recession narrative, guys, is gaining strength. You guys know that the Fed is hiking rates at a very aggressive pace. They will keep on hiking rates until, we don't know, maybe until April or May of next year. So these hikes of the Fed has a lagging effect, and we don't know exactly what the negative impact of the Fed hikes are going to be looking like over the economy, and therefore over corporate earnings next year. And the markets are starting to think about a possible recession in 2023, which, if that happens to be the case, is very likely to bring the S&P 500 and all of the indices way lower relative to the current levels that the indices are trading at. So the best performing sector today was consumer staples. It went up 0.95%. This is a very, but very defensive sector. We also had real estate going up today 0.71%. Utilities, super defensive sector, goes up 0.45%. And materials went up 0.34% as well. So defensives and cyclicals were the sectors that led the way today. And take a look. The higher multiple sectors were the ones that got hit today the most, the hottest. So consumer discretionary went down today 1.45%. Energy, obviously, because of the news that I just told you about China and the OPEC and so forth. So energy went down to the 1.35%. Technology, the most important sector, the markets went down 1.08%. And also communication services went down to the 0.86%. And if we take a look at the advancers and decliners distribution, we can confirm that we had a red day today with 3,882 stocks going down and 2,708 stocks going higher or going up. So please drop me a comment down below, guys, and let me know what stocks do you want me to go over. And in summary, guys, this might be a quiet week. Keep in mind that we have Bullard speaking tomorrow at 2:45 p.m. Eastern Standard Time. If you guys remember, he's the member of the Fed that said last week that the Fed could be potentially hiking rates up to 7%. So that was a very hawkish comment that actually put downwards pressure over the markets. I think that Bullard spoke last Tuesday, if I remember correctly. So we might see some sort of volatility into the closing bell tomorrow. And also keep in mind that on Wednesday, we have the Fed minutes. Remember that the Fed minutes is, for the most part, the document that the Federal Reserve posts. And that document is basically a summary of what the members of the Fed agreed on in the last Federal Open Market Committee. I guess that uh, shouldn't be moving the markets a lot, I would say, because most of the Fed members that have spoken recently have sounded very hawkish, or at least acceptably hawkish. But you never know if the Fed minutes can bring some negative surprise to the markets. And if that were the case, we are likely to see downwards pressure. Dwac, Sharon, what's up? How are you? Left. VIP Reef, what's up, guys? Dwac. So I haven't. I did take a look at Dwac. Let me see. I think there was last week. So I don't know, guys. This is going to be a tricky one. Let me pull up here the 4 hour chart. So Trump is. We already know that Trump is running once again for the Republican candidacy. However, that was the news. So last week we, for the most part, saw a buy the rumor, sell the news. The WAC went up to 31 bucks, and after that it dropped something like 43%. We should have gotten puts near 32 bucks. So now we have some sort of question over on the table. So you guys know that Elon unbanned Trump on Twitter, but he hasn't tweeted anything. He hasn't tweeted out anything. So if Trump happens to tweet out, happens to post any tweet, that is going to probably imply that DWAG is going to take a huge hit. But if Trump resists to the temptation of posting anything on Twitter, then maybe we can see DWAG running higher once again on the idea that at some point this special purpose acquisition company might be merging with Truth Social. Remember, guys, and keep in mind that this is a special purpose acquisition company. This is a blank check company. So this is not a company itself. So this is simply a vehicle in order to bring to the public markets Truth Social, which happens to be the social media platform of Donald Trump. So that is going to be interesting. What do you guys think? Is Donald Trump going to resist to the temptation of tweeting out on Twitter? If that were the case, this is going to be this would be the perfect victim in order to buy puts. So let me pull up here, guys, a 1 hour chart. Let me see what happened today. So the bulls closed below the 100-day moving average, 5-day moving average, and we can make the case that DWAC has some sort of decent support near $19.40. It acted that area acted as support today, also acted as support last Friday. So I would be keeping a close watch on this 5-day moving average, which happens to be descending. So we can expect this area at around $21.80 to act as a very strong level of resistance. And if the bulls happen to take out $21.80 on good volume and momentum, watch out for another push to the upside, in which case they might be potentially being able to fill this other gap that you guys can see over here up to this blue line, the 100-day moving average. If this were the case, we are talking about an 8% profit trade. So I would rather take in a momentum trade with DWAC bursting above $21.90 on good volume and momentum, then picking up some shares at around $19.40, very close, by the way, to this 50-day moving average. And if I pull up here a 4 hour chart, this is not a good looking chart, guys. A major downtrend, a primary downtrend. We can see over here a downward sloping 200-day moving average, downward sloping 100-day moving average. Not a good looking chart. The RSI is sitting at 45 points, so maybe this could be a fun trade, a momentum trade if DWAC happens to burst above $29.90, 22 bucks. However, this is a very risky trade. This is a special purpose acquisition company, and this is a stock that is very sensitive to news, good or bad, that we could get about Donald Trump and about maybe Trump posting something on Twitter. Who knows? So be careful here. And if you happen to start a trade on DWAC, you have to be very, but very careful, and you need to place a very tight stop loss. Tesla call from last Friday for December 16. Expire your thoughts. You have a call, right? What's your strike price on Tesla? And mind you guys, today I got leaps. I got 25 leaps on Tesla. You guys know that I am a long-term investor in Tesla. This short is absolutely broken, but take a look at the call option that I got, guys. This is one of my portfolios, and I only have long-term positions over here. So I got a leaps of Tesla that expires in January of 2025. I bought it out of the money. This is a very expensive call. So my strike over here is $260, but this is some sort of long-term investment vehicle, right? So obviously I picked an expiration date in 2025 because this short is absolutely broken from a technical standpoint. This is a primary downtrend below all the moving averages, downward sloping the 100-day moving average, downward sloping 100-day moving average, downward sloping 50-day moving average. The bulls weren't able to take out the 5-day moving average, which happens to be descending as well. Very ugly looking short. The only fact that I would put on the table in a positive way is the fact that Tesla is a bit oversold. We can see the RSI sitting at 23 points on the 4-hour chart. So what could be the next important support for Tesla? Tesla closed today at $167.87. It went down 6.84%. And I think, guys, that maybe it could bounce back up at $166. $166 happens to be a previous support back from mid-November. This is also a previous resistance back from late August of 2020. By the way, this is a previous support back from November of 2020 and a previous resistance back from late August. So see, this is a spot from which Tesla could be bouncing back up. However, if this support happens to be taken out by the burst, we could be looking at 104, $150, guys, which is a previous resistance back from October of 2020. What a terrible chart. What an ugly looking chart. No doubt about it. The only hope for the bulls, guys, because this chart is absolutely broken from a technical standpoint, would be the fact that the 4-hour chart, we can see Tesla a bit oversold, 23 points. Let me pull up here. 1 year chart, it is also a bit oversold, 28 points on a daily chart. So we might see Tesla bouncing back up. However, guys, remember this is a very heavy component holding of the NDX, the Nasdaq 100, which had a very ugly looking close today. Take a look. Primary downtrend below all the moving averages. The bulls fell right at the 100-day moving average. They lost today the 5-day moving average. Very ugly looking chart over here for the NDX. So if the NDX keeps on going lower, which might be the case, then Tesla has an appointment with lower prices, guys. If that support of $166 happens to be taken out by the burst, which is a possibility. $220, bro, is your strike. What's your break even? Oh, $220 on Tesla, bro, for December. That's a tough one. It could happen, Tesla, but yeah, but if your strike is at $220, then your break even is at what? $230. This if Tesla, I mean for Tesla, in order to go up, in order to climb back up to $234, this would have to be a push to the upside of 37%. Wow, this is no joke, guys. Can Tesla do it from before December 16th? Yes, it can. This is a very volatile stock, but we would have to have a very, very positive catalyst, sorry. And wow, 37%, a 37% push to the upside is a lot, guys. That is a lot. Let me take a look at the market structure of Tesla. So what is supply and demand looking like over here? Let me see. Okay, let me log in here. Okay, so TSLA, let me see. There you go. So 1.8 out of 10 would be the market structure sentiment of Tesla. And we have a demand that is way below the supply, but the demand is starting to rise, bit, not a lot. So this might be encouraging for the bulls, but yeah, the technical chart is absolutely broken from a technical standpoint. And from a market structure standpoint, we don't have very, let's say, strong signs, strong signals that could tell us that Tesla is going back up once again. We will see what happens. Time for the live stream and help us, please, says Mars Colonist. Let me see. Left. Sharon is also asking about left. I haven't taken a look at left in quite some time, guys. Ooh, oh my God, $11, guys. Do you have a position on left, Sharon? I'm curious. Very ugly looking chart. Primary downtrend below the moving averages, downward sloping 200-day moving average, downward sloping 100-day moving average. The bulls are trading below the 5-day moving average. Maybe. Can we make the case that the bulls could be potentially making a double bottom over here for around $10.60? That might be a possibility. $10.60 is a previous support back from early November. So if the bulls happen to hold $10.60 as support, they might be bouncing back up, and maybe they could be potentially they could be able to fill this next gap up to $12. $12 happens to be a previous support back from mid July. If the bulls were able to hold this support $10.60 and bounce back up to the $12, let's just round it up. This would be a 12% profit rate. However, what happens if the bulls take out this support at $10.60? Do we have any lower price over here? No, bro. No, guys. Wow, this is an all-time low for left, right? Is it? Yeah, it is. Wow, this is a new all-time low for left, guys. Jesus Christ, it went down today 1.43%, and it closed the trading session at $11.05. Extremely ugly looking chart. So if you don't have a position over here, I'm sure just stay away from it. Or maybe you can try to trade this potential double bottom, but you need a very tight stop in case that $10.60 happens to be taken out. Very ugly looking short. So if you don't have any position, just stay away from left. Yeah, what's your average cost on lift, Sharon? Let's see. Can you check out J and J? Absolutely, yeah. I am here to help. Absolutely. Let me see. Did it go up? By the way, guys, I am thinking, yeah, take a look. Healthcare. Why is healthcare going, or let's say that, why are most of the healthcare stocks going higher? Because the markets are starting to think about a recession, guys. That's the case. So Johnson & Johnson went up today 0.51%, and it closed the trading session at $175.97. Very good looking chart. We closed the trading session today making a fresh new higher high above the 5-day moving average, above the 200-day moving average, above the 100-day moving average. We can see a rising 50-day moving average, RSI sitting at 58 points. This implies that Johnson & Johnson is neither oversold nor overbought. So the stock of this company seems to be getting ready to break out, guys, above $176, if my mouse helps me. So 176 bucks happens to be a former support back from late March, and this is also a previous support back from late June. If the bulls can take out $178, and mind you guys, this is a slow stock. This is a healthcare stock that really that doesn't move with a bunch of volatility. However, if the bulls can take out $178, they could be easily filling this next important gap up to $180. This is a previous resistance back from early July. If we were able to take this trade with Johnson & Johnson bursting above 177 bucks up to 180 bucks, this would be a 1.50% profit trade, nothing to sneeze at. And yeah, very good looking short, guys. Take a look. This is the flip side of the other stocks that I just went over. And why? Well, because as I just told you, the markets are starting to think about a possible recession, and or during a recession, most people are very likely to keep on paying for their health insurance or health products. And in the case of Johnson and Johnson, they produce health products, but at the same time, they also work on vaccines and stuff like that. So this would be a very legit play, guys. If we are thinking about a recession, very good looking chart for Johnson and Johnson. I hadn't taken a look at Johnson and Johnson in quite some time, though. So thank you very much for bringing it up. Yeah, it is an option called on Lyft at $39. Okay, for 1250 call expires on December 15. Okay, so you paid 39 bucks for a call that expires on December 15. Let me go back to Lyft, guys. So let me see. And what's your average cost? What's your break even? So you paid 39 bucks. So 1250. Yeah, there's I mean, and you still have this is this December 15. Yeah, if this double bottom happens to play out, yeah, maybe we can, as I just told you, we can see Lyft climbing back up to 12 bucks. But if we happen to see further upside over here, maybe the 100-day moving average at around $14.38. This could be another possible destination for Lyft. But you don't have much extrinsic value over there, right? I mean, I just still have 25 days. Maybe that could be the case. But you didn't pay 39 bucks for that call, right? That's a typo. Did you? How much did you pay? I don't think you pay $39 for a call option of Lyft that expires on December 15, right? Yeah, that's a lot of money for a call option of Lyft. Or maybe you bought it in the money. So XLE, Nain, yeah, oil got killed today, guys. Oil got killed today because of the news that I told you about China and about this article that the Wall Street Journal posted, stating that maybe the that the OPEC uh, was going to increase oil production. That happened to be fake news. So XLE went down today 1.35%. It closed the trading session at $90.39. We are still in a downtrend. Sorry, we're still in an uptrend. We can see over here a rising 5-day moving average, a rising 200-day moving average, 100-day moving average. But with this news that we got today, and on top of that, guys, as I just told you, the markets are starting to think about a possible recession. I think that we might still see more downside for oil related stocks, and therefore for XLE, which happens to be the energy ETF. Maybe 88 bucks could be acting as support. XLE went down to the 1.35% and it closed the trading session at $90.39. 88 bucks is a previous support back from early November and also a previous resistance back from mid October. So if we happen to see XLE pulling back down to $88, this might be a viable dip, guys. In my opinion, if we are still bullish on oil, we have a bunch of positive catalysts for oil out there. So we have obviously the war in Ukraine. We have an imbalance when it comes to supply and demand. We still have a positive catalyst for energy, but as I just told you, if this recession narrative keeps on raging on, then we might see lower prices for oil. So you have to be careful here. I wouldn't touch it unless we can confirm support at around $88 per share. Very good looking chart, but from a macro perspective, I think that oil still has more room to the downside over here. Yes, on Friday, that was the premium that you paid, $39. But yeah, what doesn't make any sense here, Sharon, is that if you pay 39 bucks for a call, So what's your break even? It's impossible. You couldn't have paid that premium for that call. Yeah, that would bring your break even up to what, $50? So that's a typo. Yeah, you couldn't have paid that premium for that call. Was it $3.90 rather, which would bring your break even up to 15 or $16? But that's gotta be a typo. I don't know if you want to send me a VM with a screenshot of your trade, but that cannot be the premium. Yeah. Can you also check T-Dog? Absolutely. Yeah. Let's go ahead and take a look at Teladoc. You see, Teladoc Health went down today 3.09%. It closed the trading session at $27.90. Terrible chart, guys. I don't know if Rene Majors, I don't know, bro, if you have a position over here. Have nothing positive to say. Primary downtrend below the moving averages. We can see over here a downward sloping 200-day moving average, downward sloping 100-day moving average, below the 5-day moving averages. Sorry, below the 5-day moving average. And as of now, the bulls are trying to hold as support this 50-day moving average, $27.56. And take a look, guys, how this 50-day moving average happens to coincide with a previous support back from early May at around $27. If this support happens to be taken out, and take a look at the RSI sitting at 34 points on the 4-hour chart, we could see Taladoc maybe heading down to $24, or maybe its all-time low at around $23. Very ugly looking chart. So I would just stay away from Taladoc. This is not a trade. We could make the case that if $27 happens to be held as support, we could be seeing a bounce back up, maybe up to this 100-day moving average of around $32. But I think that we are very likely, guys. And again, I am going to insist once again on the recession narrative. You need to keep in mind that if the markets start to think about a recession, they are going to be in a risk off mood. So if you want to make money taking trades with non profitable companies such as Teladoc, which also happens to be a higher multiple stock, or a higher multiple company, you're pretty much fighting the trend, or you're fighting let's say the thoughts of the markets about the macro narrative. So we are in front, in the case of Teladoc, we're in front of a stock that has a very ugly looking chart, and that on top of that isn't being benefited by the narrative that the markets are showing us as of now, which is risk off and a pro recession narrative. So be very careful over here. I don't know if you happen to have an open position on Taladoc. I have a 24 put on it. There you go, Renee. Awesome. I love it. Perfect. So, yeah, you should have told me, bro. I could have gotten puts of Taladoc over here. Yeah, if this support of $27 happens to be taken out, as I just told you, the 50-day moving average coinciding with two previous areas of support, I can see Teladoc going down to $24 or maybe $23, which is the all-time low that was hit on October 14. So I do agree with this trade. Very ugly looking chart. Good. Yeah, please double check on that call, Sharon, and please DM me. Yeah, you couldn't have paid 30 something bucks for that call. No, no, no way. Impossible. Enphase. Valerie is asking about Enphase. Let's go ahead and take a look at Enphase Energy. What a beast, guys. Jesus Christ. When is Enphase Energy going to fall? So it goes down today 1.23%, and it closed the trading session at $308.10. Guys, this stock is a beast. This is a very expensive stock. So I just told you that the markets are in a risk-off mood. But I don't know, guys. The P ratio of Enphase Energy is at around, I don't know, 150 points or something like that. This is a super higher multiple stock, but it doesn't fold. I don't know why. is absolutely crazy, guys. This is a monster. Clear uptrend above all the moving averages, 200-day moving average, or rising 200-day moving average, rising 100-day moving average. We can also see a rising 5-day moving average, and the bulls managed to close today right at the rising 5-day moving average, $308. $308 is a very important technical area for end-phase. This is a previous resistance back from late October, and this is also a previous resistance back from August. End-phase energy acted, or sorry, end-phase energy felt at bursting above 308 bucks on multiple occasions back in August. So over here we can see the perfect example, guys, of when a former resistance starts to act as a new support. So watch out for end phase tomorrow starting to consolidate slightly above 308 bucks. That would be a very positive sign for the bulls because that would imply that they are gathering momentum in order to make another push higher, and uh, maybe they could be potentially filling the next important gap up to 325 bucks. This is a previous resistance back from mid-September. If you were able to take this trade, guys, from 308 bucks ish up to, let me see, 308 bucks up to 324 bucks, this would be a 4.75% profit trade. 308 bucks, very important spot for Enphase Energy. The RSI on the 4-hour chart is sitting at 52 points. That implies that Enphase is neither oversold nor overbought. And I'm curious, guys, about the market structure of Enphase. Let me take a look at it. So, what is the market structure of Enphase looking like? Let me see. 9 out of 10. We have a rise in demand that is way above the supply. Very good market structure for Enphase. So don't be surprised if we see Enphase hitting a fresh new all-time high above 325 bucks sooner rather than later, in my opinion. I lost money on DraftKings thinking it was going to go lower. Renee Mayer says, a real beast, an absolute beast, bro. Unbelievable Enphase, an absolute beast. I do agree on that with you. Absolutely. Um, I mean, sometimes we lose money, man. That's part of the game. So if you guys, and I know that you guys trade um, near expiration options. So if you're buying puts that expire 5 days out, 10 days out, you need to apply a very tight stop, guys. That's the name of the game. So don't be afraid of losing money on a trade. Just be afraid of not cutting the loss in a proper manner. Let's just put it that way. So that's what happens. What do you think about Home Depot? A beast. That stock is about to break out. I was taking a look at Depot earlier on today, and take a look, guys. This is an ascending triangle, and as of now, we have a very clear resistance right at 318 bucks. So Depot already failed on two occasions at 318 bucks. And today we closed at a higher high and above the 5-day moving average. And Depot, as of now, is above the 200-day moving average. And we have a rising 100-day moving average and also a rising 50-day moving average with the RSI sitting at 60 points on the 4-hour chart. I think this stock is about to break out above 318 bucks. And if that were the case, if the bulls can take out 318 bucks on good volume and momentum, 330 bucks might be coming, guys. This is a previous resistance back from mid-August. If we were able to take this trade from 318 bucks ish up to 330 bucks, we are looking at a 4% profit trade. The only thing that I am a bit concerned about Depot, guys, is that if this recession narrative keeps on escalating, then that might be putting downwards pressure over Home Depot. But from a technical standpoint, this is a very compelling chart. And let me take a look at the market structure of Home Depot. It looks like it is about to break out. Let me see what the market structure says. And take a look, guys. Remember, 10 out of 10. So the maximum amount of point that we can see on market structure when it comes to the market structure sentiment is 10. So over here we can see the market structure sentiment of Home Depot sitting at 10 out of 10 points. Very good. And as you guys can see over here, remember the blue shaded region is the demand and the purple shaded region is the supply. And we have a rising demand that is way above the supply. So this is going to be the stock that is going to be on the very top of my watch list tomorrow, no doubt about it. It seems to be about to break out. Melissa, I'm upside down on some older Amazon calls from the initial drop after earnings that expire on December 16th. Any help we will see Amazon back at $105 before then? Any input would be appreciated. Sure, Melissa. Let me take a look at Amazon. Remember, guys, and I just told you the 10-year Treasury yield went up today. So if the 10-year Treasury yield keeps on going higher, let me show you over here TNX, the 10-year Treasury yield. If TNX keeps on going higher, this is very likely to put more downwards pressure over higher multiple stocks, tech stocks, and growth-oriented stocks, which happens to be the case of Amazon. So keep a close watch on TNX. Remember the workshop that I did with Mario last week. And what's your break even, Melissa, on those Amazon calls? I have nothing positive to say over here either, guys. Primary downtrend below the moving averages, downward sloping 200-day moving average, downward sloping 100-day moving average, downward sloping 50-day moving average. Today, the bulls lost the 5-day moving average. So there's nothing positive to say over here. Amazon is not even oversold. We can see the RSI sitting at 40 points. So let's see what happens, guys. I don't know. Maybe the markets see a sizable rally tomorrow and the bulls can take out $95 and maybe they can feel this gap up to $102 once again. This is a very important spot. $102 acted as support on multiple occasions in June, and it also acted as support on 2 occasions in May. But I cannot lie to you, Melissa. So your break even is at $104, and we're talking about what's your expiration date, December 16. I mean, yeah, you almost have 1 month of extrinsic value. So you need a push to the upside of how much? 13%. Amazon can go up 14% if we happen to see yields going lower and the Dixie also going lower. Yeah, so there is still hope at the end of the tunnel, but this is a very ugly looking chart. As I just told you guys, there's nothing positive to say about Amazon, but if we happen to see some sort of Santa Claus rally, you could be breaking even by December 16. Sure. Yeah. That's a possibility. I have Apple shares at $149. Would you advise to hold or sell until after the recession? I think that a recession is inevitable. I really think so, guys. By the way, let me show you this. Do I have the chart? Take a look at this chart, guys. So the leading economic index, LEI, fell for the eighth straight month, pushing the year-over-year decline to minus 2.7%. A decline of this magnitude has preceded a recession historically. So according to the leading economic index, leading economic index, we are heading into a recession. Now the question is it going to be mild? Is it going to be deep? Is it going to be a deep recession? In my opinion, I think that taking into account let's say the pace of the rate hikes that the Federal Reserve has carried out so far, and the rate hikes that the Fed is still going to be carrying out until probably Q1 of next year, I think that we are heading into a deep recession, and obviously Apple is going to suffer because of that. So I actually closed a short on Apple today. I borrowed 200 shares last Thursday, and I closed the position today. $149 is a very important spot for Apple, guys. $149 is a previous support back from mid-September, and this is also a previous support back from mid-March. So, very important spot. Over here, we can see a primary downtrend. Apple is trading below the downward sloping 200-day moving average, below a downward sloping, not a downward sloping 100-day moving average, but the bulls failed the 100-day moving average on 2 occasions, and they lost today this ascending 5-day moving average. So as I just told you, 149 bucks is going to be a very important spot. If the bulls failed at taking out 149 bucks, I think that the bears would have room down to 145 bucks. This is a previous resistance back from mid-October, and this is also a previous resistance back from mid-June. So this is going to be Apple is going to be on the top of my watch list tomorrow, not for a long trade, but this is going to be once again on my watch list in order to shut it once again if the bulls fail at taking out 149 bucks. RSI sitting at 45 points on the 4-hour chart. So Apple is neither oversold nor overbought. We can make the case that good old Apple could be going either way. I think it is going to go lower. So if you have a position on Apple, um, I would place a stop loss. Uh, yeah, I would be placing a stop loss. Let me see. Yeah, at around 147 bucks. Yeah, give or take. Hi, Micaela. How are you? May you please check Google? Absolutely. Anytime. How can someone get training from you? I definitely need to learn reading charts. Renee Mayor say, if you have any questions, just DM me, bro. I'm here to help. Mario and all the other pro investors, we are here to help you guys. Absolutely. When it comes to fundamental analysis, I don't know if the other pro investors deal with fundamental analysis. I do it, and I also deal with technical analysis as well. Just DM me, bro. Google. Did I go over Google? And let me wrap it up, guys. I need to film a bit in Spanish over here. So let's wrap it up with Google. Terrible chart goes down at 2.01% close to the trading session at $95.83. Primary downtrend below the moving averages, downward sloping 200-day moving average, downward sloping 100-day moving average, downward sloping 50-day moving average, and the bulls lost today this 5-day moving average. And they also closed, guys, below an important area of support at around 96 bucks. 96 bucks acted as support back in late September, and this is also a previous resistance back from late October. So watch out for 96 bucks. If the bulls fail tomorrow at bursting above 96 bucks, we could see Google paying a visit down to 92 bucks. This is a previous support back from October 27. This is a very possible scenario, I would say. RSI sitting at 42 points, so Google is neither oversold nor overbought. That implies that we could see more downside over here. So yeah, I do see Google either paying a visit down to 92 bucks or maybe going higher, taking out $96. And if this were the case, if the bulls can take out 96 bucks, we could see Google filling the next or the other important gap up to 100 bucks. This is a previous resistance back from mid-November. Be careful, guys. Remember, we have recession fears. We have yields going higher. We have the Dixie going higher. So none of these factors favor higher multiple stocks, tech-oriented stocks. So I would suggest to you taking a look at good-looking charts. We just saw uh, some very attractive or compelling charts over here. We saw Johnson& and Johnson. We saw Home Depot, even XOLE. So be careful. These charts are absolutely broken from a technical standpoint. And even though we are in a bear market, we have sectors that look acceptable, that look good, as a matter of fact. So keep that in mind, okay? Hopefully higher. She says, yeah, hopefully, absolutely. There you go. Guys, thank you very much for joining me once again. This is going to be a very special week. You guys know that we have Thanksgiving on Thursday. You guys know that I usually live stream for you on Thursday, but yeah, the markets are going to be closed on Thursday. So if I have any chance, in order to live stream for you once again throughout the week, I will be doing it. If that isn't the case, I am going to be hanging out with you in the main chat, and obviously I am always here to help you. So if you have any question, please DM me or ask me any question in the main chat. So thank you very much for joining me today once again. Enjoy the rest of your day and happy Thanksgiving, guys. Okay. So take care. Thank you. Bye. Bye. Bye.